Hi everyone. Let's take a look at the markets real quick. This has been some exciting stuff. We've had some hold on a second, exciting times in the market lately, and I want to go over a few. Now is the time to be patient. There's no reason to step in and buy just yet. I do believe we are still in a bull market. This is just a fact. The technicals have not twisted us into a bear just yet. We still have a rising 200-day moving average. Simple moving average. It's at 1960 right now. Right now, this is a very good target to start wading in and buying some. For those of you that tried a little earlier, that was rejected today. We had some intraday strength and then a late day fade. All right, so it's just the scalpers stepping in and buying an oversold market, but eventually they dumped it because true value for the S&P is lower. I don't think businesses are having a horrible time right now. In fact, I think they're doing relatively well considering, but the financial system is at risk. Greece could default, and there is no plan for dealing with that. The German officials are completely out of touch, quite frankly. And no one knows what they're going to do. They don't know what they're going to do. And until that clarity is achieved, this market is on high alert. And the market is preemptively selling off in the case of a crisis. That's what's happening right now. This is the 50-day moving average. It's actually still rising, which is amazing considering we slammed right through it. It is at 2040. We lost it pretty completely. We lost the inside of the Ichimoku cloud, which is another possible support. Sometimes we slice through the 50-day, but the cloud supports us and we move back higher. It didn't happen this time. And we could very well go to the bottom of the cloud and or the 200-day. They're right around the same area. Excuse me. The stochastic I have down here on the 14 period, which I believe is the slower stotch. As you can see, this is not always, something you want to trade off of. It can go flat for a long time and give you no clues. But when you see a really broad descending stotch, that's a good time to watch for a little while. And you can see right here, it really got down, got us a little oversold, and then came back higher again. You could have played this both ways, shorting down or selling down, buying up, and now it's rolling over. And I really hesitate to buy right here because the width between the percentage of the 5-day and the percentage K3, the yellow and the gray lines here, is really wide. Now, occasionally you'll see this be really narrow, and it just gets us a shallow dip when we come back up and we kind of do this. This is very, very broad and wide. It's downsloping very severely. Why not just wait until it gets down to the bottom? If it gets down to the bottom, and assess it at that time. The 200-day is a wonderful target here. It's still rising. A lot of money managers need to ensure they don't lose out to the market again this year, and this is a very logical place to buy. There's nothing that says we can't slice through the 200-day and keep going, but that would really be a panic and really turn into a bear market, and I'm just not sure we're there yet, although that is possible. I tried an entry today, got out, glad I did. Think I'm going to get much better value down here. If the bull is still in effect, if this is still a bull market, and I believe it is, that's going to prove to be great support. Let's go look at the weekly real quick. I thought we'd hold the 20-week, which was up here, and we didn't. We lost it. So we have two potential targets. 1959 is also the conversion, the baseline from the Ichimoku cloud right here. And you can see the weekly stotch is heading down a bit. So it may very well be wise to see how far down that goes. A lot of people are dying to step in and buy, and they're getting killed. Also, if you notice, the 50-week has provided great support, and that's around 1943. Also a very good entry. Um, so we continue to look for support here. Coming into the 50-week, 1945, we've got 1960 as possible supports, and below that, really even 1896 could serve as a support. Unless the bull is dead, these will remain support. If the bull is dead, we will bounce, find absolutely nothing as far as follow-through goes, and plunge some more. I do expect the between 1815 and 1750 will be tested this year. It's a little early in the year for those to be tested. The August-September time frame is usually the weakest time of the year, and we are not yet there. So I would be very cautious in the near term, but I would not be panicky. Panic for the bulls at this point is good. I would look for the market to come in next 2-3 days. If you can get it right around 1950, 1958 for a long, that would be a good risk to reward on the long side. If it dips below that, I would be hands off. I would wait to see if it could reclaim that area. The market really needs to keep a 200-day moving average under it in order to be in a bull trend. And all of the analysts, the professionals, the highly paid bank technicians will all tell you the same thing. So I like the market to the long side. I'm going to play it to the long side. To see some of the intraday action, Twitter, just to show speculation is not at all dead. There was a rumor coming out that Carl Icahn was going to take a stake in Twitter. This lit a flame under Twitter. It had really been setting up before this. Looking at the daily, this is a good technical bull setup. We made a low here of 34 and change, made a higher low, 34.95, and a series of higher lows over here. So even though the action's a bit wild, the stock was making higher lows. Kept creeping up, and then boom, it blasts off. I got out of my Twitter too early, I'm sad to say, but I did spot these higher lows, and I did get in and did make money off it. So nothing to complain about there. Never complain when you're making money. A couple other possible longs. Aapl put in a great hammer today at the 100-day moving average. I expect some fighting around the 100-day moving average, and we could certainly fall to 103. We could lose the 100-day. But Aapl is a halfway decent long. It's building some value. Facebook, I don't like. You can see it rallied up and then put in a pretty big fade at the end of the day. Looking at some others, Tsla. Tsla was great to the short side for me. Put in a double top on an intraday basis and faded again today. I wish I had held on to my short. Again, did very well with that. I won't complain. Made a higher low on an intraday basis. Took off. This is a great long if you could have gotten it. We did 10 points here, 204 to 214. It's a 10-point range. That's huge. But as you can see, the traders are playing the ranges. In this case, it was 204 to the downside and 214 to the top. So there's no real trend here, and Tsla generally looks pretty sick. It has lost its 200-day moving average. If we can just add that back, I will show you what I mean. The 200-day moving average, I believe, is moving down gently. It is. We could run up and test it at 230, and Tsla was green today in a red market. That's a good sign for bulls. That's a good sign for the market. So it could continue higher up until 219. It has some resistance. Has a lot of resistance up at 227, the old high. It can make a marginal new high, test the 200-day, and fade again. It looks bearish. It is trading under the cloud. The cloud is red over green. This is not a good long-term setup. A retest of the 200-day is a short setup. So keep an eye on Tesla. It is a bit oversold here. It did come into support at 205, 204 off this big bull candle here, and I do expect it to keep bouncing, as a matter of fact, but it doesn't have to. Apple looks better. Twtr looks good. Twtr could trade up to 41. There's a gap up there, I believe, on a 30-minute basis. Here. No, that's not it. Here it is. 41 and change. This is not a bad target. Twtr was up 6.5% today. So that's quite the momentum, darling, at present. Gilead Sciences, I really like a lot. I'll try to. The MACD is curling up, always a good sign. The Stotch refuses to roll over. It looks like it was going to roll over here and bent up instead. Another great sign. And it is holding right around the conversion, right around the baseline, 97.72. It closed just under it, but it has retaken the conversion line. It is under the cloud, but the cloud's very thin. This is a very easy cloud to break. It's under the 20-day. It's under the 50-day. It could and it should retest the 50-day, which is at 103. It has a gap at 105. It was oversold and made a great deal, I believe, with CVS or someone like that the other day. You've got a solid candle here, which can mark a trend change and force us back down. But there's, I believe, there was good volume. Yeah, right there. Great volume on that last candle. Good volume again today. Follow through. This could be looked at as selling exhaustion over here. Put in a great hammer right there. The great buy tail. Not a classic hammer, but looks great on the weekly. Is holding the rising 50-week. It's got some resistance above the 20-week at 103. But otherwise, it looks pretty good. Biotech has been very strong, and a red tape, also extremely important. Let's go check out SPY. We already did, essentially. We're looking for support down here a ways. Gold had another great day. As I said, it was going to come up, try to test the upper side of this range, 1220-ish. It did. I would not chase it any further than here. It could come up to the 200-day. It's up to you if you want to chase it that far. If it does hit the 200-day, I expect the declining 200-day to reject it. Gold could hit the 200-day as S&P is hitting its 200-day on the downside. And then they could both reverse in the opposite direction. That would be textbook. TLT looks absolutely parabolic. This is long-term bonds. Basically put in a declining wedge here, which I just deleted, and then broke out of it to the upside. That was very bullish. Came up, put in a little flag, and it's just completely blowing off. There's nothing bearish about this chart right now. This could continue higher. This is a bad sign for bulls this year. The all-time high was 132. This is a weekly chart. Let's go look at a monthly. This is challenging all-time highs. If this makes new all-time highs, this is extremely bearish for the market. This is telling you that people are seeking the safety worldwide. They're seeking the safety of U.S. Treasury bills, because the U.S. does not miss debt payments on its Treasury bills. At least we haven't since, I believe, 1904, 1911, something like that. We missed payments, but it's been a while. And this should probably continue higher. We got to back out to a quarterly here to get some type of idea of where we are. I don't have data going back before 2002. But essentially, there's nothing bearish about this. We found support down here at 101, and we've just been moving higher. I have no idea how high this goes. If we can get a look at a yearly, this is a major breakout on a yearly basis. 125, and off we go. This is one of the reasons why equities look very, very dangerous right now. Interest rates falling so low will help housing, and they will help the debt markets in the United States at least. But the trouble with the debt markets is not in the U.S., it's in Europe. The Europeans are still over leveraged. They have structural debt, which does not go away. It just keeps becoming a problem. And their interest rates are climbing, and that makes their ability to refinance their debt, which is way too big, veritably impossible. And what happens to Europe, I don't know, but it doesn't look good right now, and it looks like there's going to be a major catastrophe in Europe this year. When is anyone's guess? So gold is not going to get crushed anytime soon. Look for it to move higher. The S&P on a monthly basis does not look good. It looks okay. It's hanging in there. Again, the 1957 area, we see some support. I still believe we're going to blow off. I still believe that if the central banks can put Humpty Dumpty back together again, we've got a good chance of moving higher. A lot of people are getting bearish. There's increasing panic. If we get down to 1950, you're going to see a lot of very bearish people. You're going to see a lot of panic. You're going to see a lot of bearish calls. And as of right now, on a monthly basis, the RSI has lost 70. That's important. We've been bouncing off 70 for a long time now. For a long time. And we are losing 70. It doesn't mean the market's dead. Doesn't mean we're going to crash. But it's a definite change in character. There are going to be some big setups to the short side this year. And shorts are going to start to get more aggressive because they're going to get paid. And that's something everyone has to keep a sharp, sharp eye on. I think we're going to have a big rally off the 200-day moving average. The RSI is on a daily basis is really hanging in there. It's hanging on to 50. We're at 52.91 today. That's amazing considering all the selling going on. This really should have plunged as it did back here, and it didn't. It's really hanging on to the 50 level. I'm very impressed by that. That's very strange. So if we do flush to the 200-day and the RSI is hanging in there, there's no reason why we can't have another V rally to old highs or all-time highs. And bear in mind, on a daily basis, there is a gap in the market. Not that all gaps have to fill, but there is a gap at 2090. And there was not a poor high volume node at that at that number, to my knowledge. So I do think we're going to revisit that level. It may take us a few months. Right now, you've got a market that's under the 50-day moving average. So if you buy the 200-day and we get a move up to retest the 50, which is only natural, it's only common, you probably want to sell the 50-day touch on the first try. It could bounce below the 50-day, take some more time, and make another attempt at it. The 50-day is still rising, and if this move is quick enough, the 50-day can continue to rise. I expect it's going to smooth out a little bit. And then we've got multiple resistance over us. We've got the 50-day, we've got declining, probably the 20-day. We've got the edge of the cloud here we've got to get over. If we continue to stay low, this yellow will cross over the gray, or as a lot of people like to put, this red will cross over the green. Christmas colors here. Christmas is over. And then the outlook is dangerously low. Note that the red can cross over the green and then twist back up again. In fact, excuse me, I did that wrong. It should be green and red. There we go. Red can cross up, and then they can twist and intertwine, and green can twist back up again and achieve its status of being on top. And the green line, for all of you wondering, is the lead span A. Lead span B is the red. So you want to keep an eye on that for the future, and don't buy until you see the whites of their eyes. And we will take another look at this in maybe a week or two. After we sink lower, you'll want to give it some time. I am not shorting here. People can step in and buy and ramp this at a moment's notice. The Fed is speaking tomorrow and the day after. There's a couple of Fed speeches this week. They could mean nothing. The market can sell off in their face. Or conversely, the first two can go nowhere, and the second one can buoy the market and ramp us 70 points. So you want to be very careful shorting. I do not like this market to the short side just yet. If we ramp up and we fail to make new highs and roll over again, you might take a short, but be very careful on the short side. There's still a lot of potential for squeezes, and liquidity is still pretty strong. We want to see fear spike up a little bit more. Fear is not really quite done all that it should. If we get up above the old high of 24, 25 and spike up into the high 20s here, that may very well mark the end of the move. That's a pretty big spike. We've had a good little pop here, but there's no reason to think that this is going to continue just yet. Excuse me, no need to think that this is going to fall just yet. We closed over yesterday's close. So even though we have a big sell tail here, I expect this will continue. And the politicians will hopefully get their act together, as they normally do, and at least bluff the market into thinking they're going to have things under control. Okay, see you next time.